Buongiorno, everybody. So good morning to everybody and einen schönen guten Morgen an alle deutschen Investoren hier. Yeah, so good morning, everyone. And so first I will do a short introduction. So my name is Manuel Hölzle, CEO and Head of Research at GBC AG. And on behalf of GBC AG, I would like to warmly welcome you to today's digital roadshow with Somec S.p.A. It's really a pleasure to have you here and to have you with us today for the meeting, which will take around about 1 hour and will be the first presentation after initiating coverage for or on Somec S.p.A. Before we begin, let me briefly share some organizational information because presentation will be held in Italian today, but we will have translations or simultaneous translation with Elisabetta. And for technical reasons, you find at the bottom of your Zoom screen, you find a bottom labeled translate or dolmetschen. So I just switch to German for a second. So am Ende unten seht ihr das Feld Dolmetschen und könnt hier auf Englisch switchen, auf den englischen Kanal. Dann wird Elisabetta Realtime simultan übersetzen. Genau, ich hoffe, das wird gesehen. Wenn es nicht gefunden wird, gibt es unten eben auch 3 Punkte. If you do not find it, there are 3 dots with more or mehr. And hier findet ihr das Feld Dolmetschen. Wenn es jemand nicht gefunden hat, mir noch mal kurz vielleicht ein Signal geben. If someone has not found the button, but I think everyone found it. And there you can, if you click this button, you can select the English channel for live interpretation. Yeah, so live translation will be provided by Elisabetta. So many thanks in advance to Elisabetta. And presentation will last approximately 40 minutes. We will dive into the operating business model, also the numbers. And after the presentation, we will open the Q&A session where you will have ample time to ask your questions. But you may also submit questions at any time via the chat function. And at the end of the presentation, then use the raise hand function to speak directly. So on the one hand, possibility through the chat function during presentation. Otherwise, please let's have the Q&A session at the end. And yeah, we are very pleased to welcome Mr. Oscar Macetto. He's CEO of Somec S.p.A. and Mr. Daniel Picciato, he's CFO and who will personally present the company today. At GBC AG, we recently, as you know, we recently initiated institutional research coverage on the company. And let me briefly share some key insights from our initial report there. So fiscal year 2024 revenues were approximately 383 million, with EBITDA up approximately 63% to 29.6 million. So really great increase in that numbers. Order backlog is approximately 744 million. And this is really, so in our point of view, really ensuring strong revenue visibility. Our rating based on our DCF model is S.p.A. with a price target of 22.5 euros. And so compared to current, so share is trading currently at around about 13.2 euros. So big upside in our opinion based on our research report. Stock is listed on Euronext Milano, but since some weeks also on Frankfurt Stock Exchange. So to sum it up, in our opinion, Somec is a prime example of strategic niche leadership with a high degree of vertical integration, strong positioning in the cruise and facade markets, and clear potential for sustainable margin expansion for the next 2 to 3 years. And with that summed up, I now would hand over to Mr. Macetto and wish you a great presentation. So the floor is yours, Mr. Macetto, and so let's welcome him. Thank you.
So, good morning, everyone. My name is Oscar Marchetto. I'm Managing Director and CEO of a Somec Group. My adventure started at the end of 2013 with the acquisition of a company whose single business was a curtain wall of cruise ships. The turnover was just over 20 million euro. I was business member of a different company. I left it and then started full-time with this activity. In this business, it used to have a niche, but with a large value and larger penetration in the cruise system, in the cruise business. So at that time, there was also an increase in requests from ship owners to build cruise ships. And the first thing was to diversify the main shipyards. There are 4 main shipyards in Europe, building. Yes. So these are 4 shipyards, one in Germany, one in Finland, one in France, and one in Italy, Fincantieri. They build 95% of cruise ships. So the first thing was to diversify these shipyards and act on these. Then the second aspect, second business, was the refit on cruise ships. Because of the external part of the ship is that subject to salt, waves, temperatures that can range from -50 to 40, every 5 years they need to be refitted from the technical point of view. And then I'm going to give you some colors about the figures of these ships. So once we started with the refitting, we also started to take contact with ship owners who are the ones who order. So part of new buildings and part of the refit, which is very profitable. 2016, once we grew, we looked into other businesses inside the cruise ships. So we acquired a company which is called Oxin, manufacturing professional cooking equipment on cruise ships. So we did the same that we did in 2013. So then we acquired another company dealing with interior design in cruise ships. In a very short time, we grew quite a lot, but I wanted to grow the business even more. So we took the ship, which is imagined horizontally, and we put it vertically, thus changing it into a building. So the intention was to do the same business also in the civil world, not just the cruise. We had a first listing in the secondary market 2018. At that time it was called AIM, to try an extraordinary operation in the US by acquiring a local company in Connecticut, designing, manufacturing, and installing all the curtain wall on skyscrapers. That startup started 1 year before, so it was a challenge. Once we acquired this company, we also acquired other companies manufacturing accessories for professional cooking equipment, blast chillers, oven, pizza oven, etc. So after that, we started to look into the civil world to find out all the arts and crafts in hotels, private yacht, private houses, hotels, and retail. So we acquired a further company. 2019, the group that usually was initially was 20 million, and now it was 250 with 15 companies. So then COVID and Corona arrived, and then inflation, COVID increase in raw materials, wars, etc. So the need of strengthening the group, and it means that it was split into categories, so goods category. So there was not just a split between marine and civil. So we have created three different segments. Horizon, all dealing with curtain walls to create a synergy with Talenta. Talenta is the word of professional cooking equipment with all the accessories, ovens, etc. And we acquired other companies, the production of horizontal kitchens, pizza ovens, etc. And then we developed a new concept that is called the mestieri, which is arts and crafts. It's a collection of all the craftsmanship, the savoir-faire in Italy. And the savoir-faire in Italy, it's marble, wood, bronze, metal, all the finishing of metals. So we got them together and we created this project that is called the Mestieri. And that started in 2022 with an extraordinary operation. And in a very short time, we have been able to reach a revenue that is very consistent and very relevant. So now we have these three divisions, Horizons, Talenta, and Mestieri. We have approximately 30 companies. More or less, we have 60% in the cruise world and 40 in the civil. In a very short time, we were able to diversify it, and 45% in the United States, where we operate as a local company. The company grew very much. The refitting activity takes place in the US, and we're local, so no tariffs and nothing like that. We work both in euro and dollar, and we have this integration between the naval and the cruise system. So from 20 to 3 and a high 380 million revenues in 2024. Just to give you some parameters in the naval world, the cruise. So just to give you some example, 2019 was the record year of passengers in cruise ships with 29 million passengers. By 2025, the end of the year, there will be almost 38 million passengers. That means 9 million passengers more as compared to before COVID, and now with the paying value, which is 30% higher for the fares, for the tickets. All the ship owners, which are multinational from the US, they are really having a great margin. They're paying the debt from Corona, but they are ordering new cruise ships. So in April, there's a trade show in Miami, and we take part every year where we have meeting with the ship owners. And that occasion, we know that for the 4 shipyards, we know that the plans are to fill up the shipyards until 2035. So the long-term production view for building and refit is for 10 years. Last year, some ships have already been ordered. Now we are receiving orders for us. In the next months, there will be new orders that we're going to release. So our core is worth 60% of the turnover, and this will continue to grow and to make margins for the next 10 years. This is really an encouraging sign, especially for the time in these geopolitical conditions. Also, of course, for all that is happening. So that is really fortunate and a privilege for us, and also for the ship owners and shipyards. There are approximately 340 ships on sailing at the moment, and they need to be refitted both internally and outside. And more than 50 ships that have been ordered for the next years.
Sure.
These values have a very higher value in terms or as compared to the past because tourists, passengers have changed the way of sailing. In the past, these ships were very big, but the cabins were small. The local common areas were very small. Now, the ships are bigger with larger common areas. The cabins are much more comfortable, and also the entertaining part is more important. So this cruise is moving to 4-star, 5 stars, and luxury. And also the luxury hotel chains like Ritz-Carlton are manufacturing cruise ships. Four Seasons too. MSC are also manufacturing luxury. Even Disney, Regents. So all of these chains that are building luxury cruise ships. So this is quite a growing trend. So much bigger ships as compared to the past, double tonned as compared to the past. So also for us, it's added value. Just to give you an example to understand the value for in ship owners. So a small ship can cost 500 and the big one up to 2 billion. And the break even is approximately 3 years for the ship owners. This makes this business really skyrocket. Out of these 350 ships currently sailing, these have two features. So technical refit, but also making them sustainable. Also the propellers, the engines need to change to make the ship work more sustainable. That is why also for the refitting will grow for the next 10 years. In the refit, or the refit accounts so 25 30% of the cruise, and we want to grow in these because the margins are very higher in the US. And one more thing, so in the US there are no tariffs because the shipyards are in Europe, but refitting is outside the US, even if the ship owners are US. So they do not have to be subject to tariffs going through the US. So it does not, tariffs do not impact on this business. As far as Fabrica, which is the civil company in the US, started in 2017 with $500 million working in Washington, Philadelphia, Boston, and dealing with the northeastern part of the US. They specialized in developing very complex projects and working with architects. So helping us to achieve very prestigious works. And for instance, MIT building in Boston, the Rolex headquarter, and the General Hospital in Boston, which is one of the biggest in Europe, TWA, JFK, and the Nokia building that we have just released, the press release, the Moderna building, so in the technology outside the fluctuation that may affect the residential. So we work a lot with institutional building, luxury retail, and biotechnology. So these segments where there is money and people continue to invest. Then we have the part of professional cooking equipment, where we have combined more companies, one professional cooking, chill, blast chillers, horizontal kitchens, pizza ovens. And again, this is and you have Rational in Germany, which is a huge company. But we are smaller than that, of course. But we would like to create this hub, this sort of small boutique of professional kitchens, which in has been growing over the last 20 years. And the part that is we're very happy with is Mestieri. Mestieri is a group of artisans, so experts in the savoir-faire, and we are working in luxury hotels, yacht, museums, and private luxury homes. So this is very sought after. It's very coveted also in Europe, not just in the US, because Italian artisans have a very long tradition, and everyone envy or like these trends. Alone, an artisan would not be able to take jobs that he would like. So together with under the umbrella of a group, they would be able to acquire large jobs. So this is a short overview of the history that was set up approximately 20 years ago. It's quite a unique in its genre. It's a group made of three segments that work synergically, so horizontally and vertically. And that's maybe in short, and this is a sort of overview. Or if you have any questions, or if you'd like to have more information on the figures to explain 23 and 24. Hello, my name is Daniel Bicciatto. I'm the CFO of the company. So if you'd like to have a look at KPIs. These are the results that we publish. We have published in quarters and upline, and then results, complete results in the half year and full year. So the first quarter confirms a growing trend for us who work in projects of construction. The top lines and revenues is not a specific indicator that can be looked at in a shorter period. So we take into consideration longer horizons and indicators, especially half year and full year. So the trend is growing, and the expectation is by a slight growth as compared to 2024 by the end of the year. I'd like to give you a recap of results of 2024 as compared to the previous year, and also explaining where we come from and the reason behind these results and what we expect approximately for the next exercises. So starting from the top line, our group, as our CEO has already explained, this group comes from a 10-year path of important growth, organic and external growth. By external through the many acquisitions and organically, but with the business growing in all divisions. In 2024 was a record year, 382.8 million revenues, plus 3.2%, and this was all organic growth. So this growth, as we will see in a short time, involved many divisions. What is significant, I reckon, is the EBITDA trend. 2024 comes back with a marginality which is aligned with expectation. EBITDA was 30 million. So with a decisive increase as compared to 2023. 2023 was a closing year, so a year in which we closed some marginality and referred to projects that had been acquired previously and even before Corona. So that really had to pay the price of the increase of raw materials, staff, labor, crop costs, etc. So that was sort of the end and the year in which this impact was significant. So day after day, when these contracts have been expired, now we have written a new page and creating new projects that were signed after COVID with aligned prices. So marginality is recovering in all segments and especially in the cruise ships. And I also like to specify something. These 30 companies have all been acquired with the strength of the group. And of course, with the financial contribution of banks. So the debt that we had developed was always in view of growing the company. And an important aspect is that by growing so quickly in 10 years, also 22, 23, there was a sort of reorganization in-house. Managing 30 companies, not like managing one. So after Corona, after the increase of raw materials, after wars and the geopolitical situation, which complicated all of the companies very heavily. So the previous organization, the previous structure needed to be updated. So in 2023, in addition to the jobs and to the works acquired before the pandemic, we had to pay for an important internal reorganization, and as 2024 has shown. Yes, for us, reorganization also means administration people. So I joined, Mr. Bicciato joined the company in July 24, and more and more the group is being organized so that it's more integrated. Data can be collected very quickly, also in the predictive monitoring jobs all the time. We work by projects, so by work in progress. So it is really essential to have this monitoring system to foresee costs in view of closing projects. So project management and finance were really relevant, but also we invested a lot in adjusting and updated IT systems so that all of the company were aligned and to carry out a predictive analysis for the next years. So this is something that we have invested a lot and we're still investing on it. In addition to this, a lot of effort has been made monitoring debt. One of the most important results was the significant improvement of the net financial position, as highlighted in this slide. So 2024 closed with a net financial position excluded IFRS 16 of 36 million as compared to 60 million last year. So a large part of EBITDA has been transformed into cash with the aim of deleveraging and reducing debt. Also, including IFRS 16 marks the minus 30.5%, so moving from 84 to 58 million. And of course, there's the leverage, financial leverage used for acquisition, but also put and call debt, because when we acquired new companies, we acquire the majority and then we adjust with a put and call mechanism to the minority acquisition. So this already includes the put and call consequences. Thanks to this reduction of debt, now the net leverage ratio, so the ratio between net financial position and EBITDA in 2024 went down to And the aim is continuing to go down, so to decrease these indicators, thus improving EBITDA marginality, lowering the financial leverage, thus reaching our aim, which is 1 to 1. So, NFP in over 3 years, more or less, so that we will be ready in the future to start with new acquisition, new M&As, and potential extraordinary operations. If you have any questions on the way, or we can delve into detail. So maybe we can stop here, and if you have any questions, just feel free to ask.
I would recommend to have the questions at the end, please.
Okay, so let's continue with the detail. So let's give breakthrough by segment. So Horizon is counts 61% as all revenues. The second segment is Mestieri, and 23%, and the third is Talenta with 15%, more or less. So the increase on this account was on Horizon, driven by Mestieri, but also driven by the curtain walls. And then, as far as the revenues are concerned, so 50% more or less is developed in Europe, whereas 43% is in Northern America, thanks to the refitting activity and also the creation and the manufacturing of curtain walls and the civil construction. Then, overall, we already mentioned margins, and marginality is improved, also driven by the segment Horizon, but also Talenta. And in particular, in the Horizon segment, we would like to highlight the great contribution of refitting business. This is a really strategic leverage business. The group is really targeting and focusing. We have competitive advantages because we haven't mentioned that we are absolute leaders in new buildings, so balconies and glass panels, doors and windows on cruise ships. So being leader, and when I say leader, we have 80% of the market in cruise ship, which 80% are built by Somec Group. And this also gives us a competitive advantage also for refitting. When the ship is sailing, and this is owned by ship owners, so we are among the first interlocutors who get contacted by ship owners because we know the doors and window system. We have all the certifications and we can be much more efficient as compared to competitors. These really provides us a competitive advantage both in maintenance and extraordinary maintenance. And also, I'd like to highlight that we have two kinds of customers. So, on one side, large ship yards, which are located in Europe and with whom we have a long-term partnership. So, it's a joint activity because we are loyal providers and suppliers. But on the other side, our customers are ship owners for whom we carry out maintenance and refitting activities, and with whom we discuss and we talk if new ships have to be built, because it's usually the ship owner who suggests the shipyard to work with Somec. So this is a slide dealing with backlog. So, of course, we are allowed to have a long visibility of our works, in particular for the naval sector, the cruise. So 744 million backlog. We expect it to be stable or even increase over time, thanks to the fact that more and more shipyards are trying to uh, plan building in 6, 7 years' time. Because they have to plan construction, they want to be sure that we can be reliable and we can be available because we are a critical supplier. It's not easy to penetrate and to enter this business because we require certifications and know-how are required. So all of the shipyards want to be sure they have the production capacity from their suppliers. And this allows us to have a large visibility and negotiate next orders. So this is the composition. While on the right-hand side, you can see the current scheduling that also is adding new ships. So, and with the new ships that will be built. If we move to results by every division, this is Horizon, where revenues marked an increase driven by the refitting and also quite a significant increase of EBITDA margin thanks to finalization or closing of all projects and better marginality and a very careful management of projects thanks to our structure and reorganization. As far as Talenta, so all the kitchen and professional kitchens are concerned, so 2024 is aligned with the previous financial year, but again, we were able to increase the marginality thanks to the performance in the kitchens on cruise ships. Again, we are a favorite partner and one of the leaders in cruise ship kitchens, but also good positioning on civil kitchens. So again, it's important to plan the future or as the glass panels and curtain walls. Something I haven't mentioned is that our projects are all turnkey from design to installation. So starting from designing the project, which is always customized. We don't have standard or set standards and repetitive. Every time the project is designed by the ship owner, so designed, engineered, not just the curtain walls, but also the kitchens, and we have all the facilities and plants which are very close to the Somec headquarters in the northeastern part of Italy. So we manufacture products, we assemble them, and then we also install them on site. So we cover the whole supply chain and keeping the know-how inside, so in-house, which is a critical aspect. As far as the third division, Mastieri, is concerned, their 2024 marked a slight decrease and a slight decrease in terms of marginality. Mestieri is the youngest project, so it grew significantly over the last 3 years by external M&As. 2024 was a reorganization year, and a new managing director joined the company with the aim of creating this very strong synergy among all the acquired companies. What does synergy mean? Also, the ability from the sales point of view to offer turnkey projects that include more products, marble, wood, metal, So these large integration in the sales offering, but also industrial offering and integration. Small size companies are now growing, and we are uh, combining the same sales office, administration. So also leverage and capitalizing on supplies. So integration is really bearing or yield giving results. 2025, we expect a recovery in marginality, a very significant marginality, which is the division more projected in the long term, in which we expect the higher growth rate improvement of marginality. And this is our expectation. So, and again, the last line, you can see great improvement. 2023 was negative because of non-recurring events. So remeasurement of put and call. So as I said, when we acquire new companies, we acquire 65% and then we adjust by put and call. The debt of put and calls is calculated as a multipliers of EBITDA of these companies. So if the acquired company is performing better than our plans, we have to readjust debt for put and call and then adjust the account and take into account these better results. So 2023 was impacted by these elements. 2024, on the other hand, highlighted a change. There were these adjustments were not present, so improvement of marginality and results that was mainly draw, so coming to a pair, even with writing for some cooking equipment or cooking professional equipment, and that was the last line. So if we continue on the net financial position, we already mentioned the significant improvement of the net financial position. But however, and I'd like to highlight these, is that our business is largely conversion EBITDA. We are not particularly capital intensive. To support our business, so we don't need to have large investments. So we do processing through automatic machineries in our plants. So cuts, but there's not a very elaborate machinery. We buy glass, but most of the assembly part does not require large investments. So our biggest investment is on people. So on IHR training in terms of design, project management, and all of our companies are productive. So they have production, manufacturing plants, and the part of design accounts 20% on all of our labors. So we are over 1,000 people, employees, and 20% are focused on the design and technical department. So to conclude, our business, if control systems are well performing, then we can transform EBITDA in the cash. So with the ability of improving financial position and of course generate cash. So for future M&As and potential M&As. So that was the overall presentation. We have time for any questions.
Yeah, so thank you very much for the great presentation and the deep dive also into your operating business. We have already some questions here in the chat, but also here's a call for sending more questions into the chat or raising hand for direct question. But first question is you've highlighted in-house engineering and production as a differentiator. How do this impact margin resilience and project execution risk at scale? How do you view that? Yeah, that in-house engineering approach regarding margins.
This is a strength because it makes us stand out to have non-standard systems, but every time customization is really a point that makes us stand out. Shipyards and ship owners always design new ships, a new layout, a new design, and always updated, also sustainable solutions. We are working a lot on insulation, glass panels, so for thermal insulation of the ships, and other technical solutions that are always required. So we have R&D department that works effectively to find customized solutions. These are very specific departments, kitchens, both for the civil and cruise, interiors, both for cruise and civil. They are separated departments. Every time it's a new investment in terms of research, but we think that it pays over the long term because we can become trustful and trusted and loyal partners for our customers. And when a new project is developed, we have the opportunity to replicate, so to use our internal know-how, because ships are usually produced in a slot, so not just one, but maybe 4. So once the first ship has been developed, then we have a reference for the next ones.
Okay. Okay. So thank you very much for the answer. Next question is regarding M&A again. You had a lot of M&A in the past. So how do you prioritize now capital allocation between M&A, organic growth, and deleveraging in future, especially in light of further improved financial position? So yeah, so question is regarding M&A in the future compared to organic growth with focus.
So already in 2013, Somec was an extraordinary operation that I carried out. All of the companies have been acquired to increase the know-how and to grow the company even more. So we have decided, even after M&As between 2021, 2022, approximately 60 million investments, because we also invested in a further minority of the US company. So our aim was to reduce the net financial position, getting closer to 1:1 ratio EBITDA and the net financial position. I'm already assessing some companies. I think that we won't have any M&As in 25, but starting from 2026, we will start evaluating some M&As, especially in the Mestieri and Talenta segments. So we will continue our growth both in organically and also looking outside with further M&As.
Okay, thank you. A further question is, what was the background of the sudden recent capital measure, and the Mestieri division has been lagging behind the other segments in terms of profitability. what are the levels for raising profitability to at least the average group level there?
So Mestieri is the most recent segment that was founded and finished. So 2 years ago, last year we had new managing director. We invested in new offices. We opened the US branch, and we invested a lot to that. And there are at least 2 companies in Mestieri that in 2024 exceeded 10% EBITDA. So the aim is for the future to have more margin in EBITDA as compared to the other group. But in these 2 years, we had to invest a lot and also spend a lot in reorganization. So it's the most recent branch. And you will see in the half year that results will be more positive. So at the end of the year.
Mm-hmm. Okay, thank you. Perhaps also regarding your vision for so regionally speaking, what is the group's longer term vision in terms of geographic diversification, especially in Asia Pacific and Middle East? Could you tell us more about that?
Currently, I chose, we are exposed 45% in the US and 55% in Europe, old Europe. We're not exposed or very little in China, so maybe 1-2%, and the same in the Middle East, which is almost close to zero. So 60% of wealth is where shipyards are and where the cruise ships are, because these 60% revenues is between US and old Europe. So I'm continuing to invest. It's a prudential choice, a decision, and also for geopolitical situation that may change between today, tomorrow, the day after tomorrow, where we struggle to have forecasts.
Mhm.
So, especially from some data from Trump and the US, but over the last 70, 80 years, US has been characterized by democracy and compliance with clear regulation. So I will continue to invest in Europe and in the US.
Mhm. Okay, thank you. So also one question also from my side. So regarding green technologies and sustainability. So how is Somec positioning itself in response to increasing demand for environmentally friendly solutions, or in shipbuilding or construction? Are there specific innovations, perhaps also in glazing or interior design, you currently have in your portfolio? So the green approach.
Absolutely, yes. Yeah, we have issued a sustainability report, and every year we're committed to resources and effort to have more credibility in these reports. So there are over 200 people between designers and technical departments. This is a synonym of finding suitable solutions to the current requests of architects and ship owners. They have to build to have economic advantages. They need to be sustainable to also have economic advantages. And we do that together, especially the US technical department takes some wins some tenders because they're able to transform the architect's idea into something that is sustainable and that sees the light. So this is the strength, this strong connection between the US and the Europe and the US. And also in the civil world, the transition to greener requirements was also a business opportunity because, of course, glass glazing needs to keep these new standards in terms of design, and it will be the future too. But the civil world started 15 years ago, 20 years ago to be more sustainable. They're continuing and they're always pushing this trend in green investment, especially for glass glazing. What did not happen in the cruise world, which started just a few years ago, now especially thermal insulation was not so felt. Energy in a ship costs less because it comes from engine drive. But now even the ship owners wants to raise the bar in terms of sustainability. Hence, new solutions for very high insulation, which for us is work size, a green work size, which is even higher and even more complex. In addition to these, our clients want more and more information and they want to be more transparent. We are, of course, ESG compliance, but also the carbon footprint is required. So we are asked so many questions in terms of sustainability, cultural governance, and environment. And we have a dedicated department for sustainability. So that means taking a picture of what we are, but also strategic sustainability in the long run.
Mhm. Thank you. So I have first a question regarding pipeline visibility and order quality. So you have really a great order backlog of 744 million. Perhaps can you elaborate again on the quality and margin expectations of the pipeline and how much of this backlog consists of high margin marine projects?
As I mentioned, and Daniel mentioned, 750 million backlog. And this backlog does not take into account all of the companies because not all of them are included in the backlog. We communicate orders which are above a certain figures. So maybe for a refit, we don't even release this information. Refit is 50, 60 million for the cruise part. Some of the projects are not even informed of. Then there's all the part of professional kitchens, which is on catalog. So refit is not taken into account. So there's not a backlog. And also the Mestieri part is not included in the backlog. They're very short and quick jobs. There are mainly 4 companies doing the backlog that you see. And this was taken after the company reorganization. So this is not old backlog. And also the coverage and hedges for material, because in the past we didn't use to have these hedges because everything was quite flat. Now we take and we sign agreements for the future and for future orders in the case of cost increases. Yes, we worked a lot in terms of risk hedge for backlog. There was a risk from the past, so we started with a strategy and covering or protecting the commodities, which is aluminium, glass, steel, And of course, some commodities that we can cover for some months, others that cannot be covered. So we started to close long-term strategic partnerships with our suppliers. So once the order has been acquired, we can be sure of the whole upstream and downstream flow. So every year we try to reduce our risk share. So this for 2024 also with the lean organization in logistics. And if you'd like to come and visit us and see our productions, we are in the northeastern part of Italy, so near Venice, in Conegliano, near the Prosecco Hills. So if you'd like to come and visit our companies, you're more than welcome.
Mhm. Okay. Thank you. Also, again, question regarding your EBITDA margin. So you expect, and we also expect in our research report, further rising margins. So where do you see margins in future? Where could be a goal regarding EBITDA margin also in the longer term view?
We recorded a growth in revenues, which is very significant. And the goal for 24-25 is not to grow so much in revenues, but to grow in marginality and profit and decrease the net financial position. So this is our rules for 2024, and that will stick to also in 2025.
Mhm.
As for profitability, will be focused in Mestieri and Talenta, the two businesses that have that may reach above 10% EBITDA margin. If I consider professional kitchen, their EBITDA margin is over 10%. And also, because we work in luxury retail, hospitality for Mestieri, two of the companies are already showing over 10% EBITDA margin for in 2025. So the growth will be in Talenta and Mestieri, not just for margins, but also in terms of M&As.
Okay. Okay. Thank you. So then also coming to dividend, two questions regarding dividend strategy. So how do you see in future, so with rising margins, also rising numbers of bottom line, how do you see dividend strategy?
There's not a dividend policy for the time being. In the past, they were distributed, and we haven't released information and strategy to the market for the next years. But in a 2-year time, and 2-year span, we will go back to dividend distribution policy. So the goal is improve marginality, increase, so reduce net financial positioning, reducing leverage, deleverage, going back to the condition, ideal condition for M&As, and go back to the policy for dividend distribution.
Is that the same also for possible buyback, share buyback systems?
The buyback system. So currently we haven't started with the buyback policies. We are assessing it, but it would be very slight, a very limited part.
Okay. Perhaps so regarding your shareholder structure, could you give us again light on this. So how is it? How is free float? How is family? And perhaps also again a word about multi-vote system, etc. Perhaps.
So 73% currently, 75% is Venezia S.p.A, which is owned by the CEO, Mr. Marchetto, while the floating is 24%. Currently, there are no
24%.
policies so there's no changes are planned or a capital change. So this is the structure that will have certain continuity. We're not foreseeing any change in the shareholding structures.
Okay, so thank you very much for that. I do not see further questions. Are there further questions? So please raise hand or send it to me. Okay, next I see one. Yeah. Is there so from Carsten's question? Is a possible capital increase, or is there a possible increase thought about if there is further M&A activity coming? Or could you think about financing M&A strategy?
This is a strategy that we are not excluding, so it may be assessed in the future. Should M&A was interesting in the long term and significant, and also if the share price went back to the correct price, because currently it does not represent the overall asset of the Somec Group. So if the price really represents the group value, then and a significant M&A operation, then only at these conditions we would be ready to evaluate a capital increase or other operations.
Okay. Thank you very much. So please raise hand for further questions. Otherwise, we would come to an end. I think most of the segments were discussed very well. So please tell me, are there further questions? Otherwise, we would close call then. So I do not see any questions. So perhaps finally from your side. So the last or finally your pitch. Why to invest now in Somec? So we see strong order backlog with increasing margins. So what's your final pitch? Why is now the right time to invest in Somec, in your opinion?
Simply because if you have a look at the real, not hypothetical vision for the next 10 years, it's something really concrete. The business that says 60%. If we have a look at where we are positioned geopolitically and where we can grow in the market, our issue is not where to spend, because we have huge markets. The issue is the reorganization that we have carried out and we are still going through. So this is just a provocation. So a quote is 90 million. So in the US, we have one company. If I sell that company 110 million revenues, 10% EBITDA, and it's 1.5 evaluation of the Somec group. So that makes you realize how much understated we are in this market. So over the last 2 years, the small and medium enterprise in Italy have been penalized because of the expiry of PIR. When we were stock listed, we had these PIR, these sort of bonds, then they were devaluated, but now with our cash, yearly cash, we could do delisting because having been delisted for me, because I'm a majority shareholder, it would be ideal. But I believe in the stock exchange. I believe in this trend, and I believe in the future. I want to leave the company to my manager and to my son. So I believe in the stock exchange. And I think that the stock exchange will prove us right and will evaluate it in the right word. Oscar, if I can say something. So, as a speech, I would summarize the market and the segments that are definitely increasing. Backlog confirmed. Yes, I'm translating.
Hey.
So visible backlog and growth of the company that works in growing markets, absolutely growing markets. Profitability that is recovering. The risking and the leverage are visible. A shareholder base that is more and more international, and it's likely to draw even foreign capitals and flows. So I would summarize these 5 points as a pitch for those who would like to invest to Somec today.
Yeah. Thank you very much. I think good closing words. So we initiated coverage on Somec for some days ago. So all investors are invited to receive it again. If not, got it before, but we already distributed. And we also see it this way. So our target price is 22.5 euros currently. So we see a big upside. For us, very important is the increasing margin situation. That is our valuation driver for the future. And we are also looking forward to see you in person in MKK. So 12th and 13th of November. All investors here also invited to meet the management in person, physically, not only digitally, in Munich, in Monaco. So 12th, 13th November, 40th MKK. Yeah, so until then, so good luck for your operating business, and looking forward to see you in person then. Thank you very much for the great presentation with deep insights and also sharing your vision with us. So thank you very much.